I welcome all the members on behalf of Nashik branch for virtual program on auditing standards organized by Nashik branch of WRC of ICI. For this session, we have our Central Council member CA Srinivas Joshi sir and a well-known speaker CA Dhananjay Gokhale sir. So I request our branch chairman CA Rohan sir to introduce our today's speaker CA Srinivas Joshi sir. Over to you, Rohan.
Thank you, Soil. I welcome everyone. I also welcome Srinivas sir and Gokhale sir. Now coming to the first part, reporting standards on auditing. We have a renowned speaker, Srinivas Joshi sir. He is a partner in CVK and Associate Chartered Accountants, Mumbai. He is in practice as a chartered accountant over past 40 years. His special interest in the subject are accounting, auditing, company law, and FEMA. He is member of ICAI and ICSI since 1980. He is elected member of Central Council, the Institute of Chartered Accountants of India, for the period 2013 to 2016 and 2019 to 2022. He was chairman of WRC of ICI for the year 2011-12 and its secretary for year 2005-2006. He was regional council member of WRC of ICI for 3 terms, 2004 to 7, 7 to 10, and 10 to 13. He is also a conveyor of Mudlund Study Circle for the year 2000 to 2002. He has also chairman of Financial Reporting Review Board in 2019 to 2020. He was chairman of Professional Development Committee. He is currently a chairman of Professional Development Committee 2020-21. He is vice chairman Auditing Committee for 2021. Udin Director Rate 2020-21. Auditing and Assurance Standard Board for 2014 to 2015. And he is also a member of several important committees of ICI, such as Examination Committee, Executive Committee, Management Committee, and Commercial Law and Economic Advisory Electoral Board. He is also a speaker at various seminars of chartered accountants and students at WRC in its branches on the subject of accounting standards, auditing standard, company law, banking, audit, internal financial control, frauds, networking and merger, peer review, career counseling, and how to face CA exams for CA student for past 16 years. With this brief introduction, I request Srinivas sir to take the charge of the session.
Good afternoon, all the participants. And I think almost all of you know me. So introduction is actually is something that you repetitively hear, because I come to Nashik at least twice a year. And with Rohan there, I would come 12 times a year. So I think that is where you will listen to the same thing so many times. But anyway, coming to the subject proper on reporting standards and auditing. In my previous term in Central Council, I was a member of FRRB, Financial Reporting Review Board, and also this last year I was the chairman of Financial Reporting Review Board. I am currently also in the board called Tax Audit Quality Review Board, where we review both these boards, Tax Audit Quality Review Board and Financial Reporting Review Board. We review various listed company balance sheets. Balance sheet is reviewed in FRRB, where we give our observations to the chartered accountants, and in the TAQRB, that is Tax Audit Quality Review Board, we review the tax audit reports, and we'll start reviewing GST reports now for the purpose of retaining the quality of work. There, when you do this kind of work, it is actually a self-learning. If you really ask me, it helps me in my own profession as to say that what kind of errors others make and how we will not make it. That's an advantage of being in such committee. Also, I am a part of Accounting Standard Board, Auditing Standard Board, Internal Audit Standard Board. All these committees and several others give us that insight into doing the work in the better way. As we always say, when you point a finger to the other person, four fingers are leaning towards you. So I think we need to know that others are not wrong. You are equally wrong or even more wrong. Probably if they scrutinize our balance sheets, our reports, our notes, they would know that we would know that we have made more errors than what others have made. And this I am telling you about the best of the best firms in this country are having this kind of issue. That's why this kind of seminars on reporting standards on auditing become extremely important. And actually we myself and Dhananjay, and we have a group here which had decided that whether 5 people attend or 50 people attend or 500 attend, we keep on speaking on auditing standards, because this is somewhere where whatever is missing in our auditing profession can be probably bridged to a certain extent, if not everything. And therefore the whole structure of this particular 2-day program on standards on auditing, previously it was called auditing standard, or loosely we still call it the same, but the standard or auditing, we are trying to cover some of those standards which are more relevant. And some standard, even though they are applicable only to the listed companies, I would request you to look at it, because there is no prohibition in reporting them in our own reports. There is a tremendous need to report those things, even though they may or may not be applicable to a particular type of company. It will help us as chartered accountants to really look at that and see that how best we can use it. Because what I'll speak and what Dhananjay will speak, it is actually, this is one series of standard. In fact, there are some more standards in the same series, which is called 700 series. And the 700 series is having 700, 701, 710, 720, 705, 706. There's a whole list of standard in 700 series, which are relating to reporting part in the auditing. There are many others also. We'll talk some of them tomorrow, and there are many others which we can talk. There are overall many standards, and we'll talk about it. Next, next slide. Can somebody go for the next slide? Yeah. So today, first we will start with SA 700. Forming, it should be an opinion and reporting on financial statements. Now here we are forming an opinion. And how to form an opinion is a question, and what are the issues in that, and thereafter how we report it. We generally, what we do, we go by the standard format of reporting given by ICI, and we don't change it, because we don't know either how to change, or we are afraid that we may change it, not change it in proper manner. So I think with that fear, we don't try to change and take a whole risk of in auditing, of not reporting the right things. Most of us do private limited, I know. Therefore you feel who will read, only the owners would read, who are all related party relatives and family concerns, but it is not so. It's a question of keeping a quality in reporting to whomsoever I report, whether it is to a proprietor or to a partnership or to a limited company of related parties or relatives, or a listed company or not listed public company, trust, cooperative society, whichever I do, I must keep my standards. And that's why we are having this subject today. And this particular format can be used overall, not necessarily for limited. You can use similar formats for other type of audits also, which you are doing. Next slide. Yeah. So here, all of us have signed this report under Companies Act, and therefore, I'll quickly go through the parts of that report that we signed. And as I speak, I will try to tell you some of the niceties relating to this, because many times we sign something without knowing why I'm signing this, or what is the relevance of that particular statement, or relevance of particular wording used in a particular report. and what it means to all of us, and we should know that as a chartered accountant. So I'll just quickly run through this. First of all, it is called independent auditors report. So we are independent and we are statutory auditors and independent auditors. So it is stated. Again, it is addressed to whom? Addressed to always who appoints us. So it is addressed to the members in case of companies, because we are appointed in a general meeting. Then report also states that this is a standalone financial statement. So when we say that we have a consolidated financial statement, you have to state this is a consolidated financial statement. Otherwise, we use the word standalone in our report. Another thing, what we normally of course say that this is relating to this company, name of the company, and we say it comprises of balance sheet, profit and loss account, and cash flow. When the standard format is talking of cash flow, if the cash flow is not applicable, many of us just print it in the same way, and cash flow, and actually there is no cash flow includes. So we have to be cautious that what we are really signing. If there is no cash flow, we have to say statement of profit and balance sheet, a statement of profit and loss balance sheet, and profit and loss account. We shouldn't write cash flow, but it is there in the format. So I'm just saying. It also talks of notes to financial statement. It also talks of significant accounting policies, and it is also saying other explanatory information, and it says the reports received from branches. So with all, hello, yes, anyone? So with this particular set of documents, in the previous format, this type of listing was not there. Here it is even listed as significant accounting policies, other notes, everything is mentioned in the report itself. So the reader will know what is supposed to be at the back of this particular report, how many documents should be attached. Now, second part of it is financial statement. We say that it gives true and fair view. Now, in the previous type of report which we are giving, this statement on the opinion was at the end. So suppose the report runs into 10 pages, this would be on the 10th page. Now, internationally, it was thought that this is not right. This is not right. Why this is not right is because you are trying to say that first, when the reader reads it, he should know what is he reading. What is he reading? What is he reading in a sense? What is he trying to get? Whether he's trying to read a clean report, what is called unmodified technically. So clean report or a qualified report. So therefore, the opinion para has come as a first para in this kind of report. That's why we have to be cautious. Many times, if I want to qualify, so in 1 year and next year that qualification is not there, I must see that last year these fields which are called changing fields, I should highlight in the report. Say when I say I am qualified, or I say subject to this I am reporting, or I am saying I give adverse report, that what is adverse report? It is not true and fair. Or in one of the year I say I disclaim, I do not know that whether I am giving whether the accounts give true and fair view. I must highlight that, because one is the reader is comfortable in reading what is the real opinion, and second is next year you are aware that this is what I wrote last year, whether this is still valid today. So I think that part you should take care while doing that. Now coming to the next part of it is I've been this way. Go to the next slide. Now the next part is just change the slide. Who is changing? Yes. Now next part of this report is basis of opinion. First I told you have given an opinion, whether it's an unmodified report or a modified report. Now you have to justify why this kind of report I'm giving. So the basis of opinion paras talks of various things. It talks of first that I am doing it as per auditing standards applicable in this country under 143 section 143 subsection 10. Now when I state that, many of us do not know how many auditing standards are there today. I'm just telling you there are 35 standards and many others, of course, with SQC1 also. So there are several standards which we should know before we say that this is done as per the auditing standard. Whenever there is a disciplinary made against any member, the disciplinary directorate or disciplinary members would ask you that how many auditing standards you have followed, where is the documentation for that? And we hardly document because we don't have even the list of auditing standards. Then it just be there. Don't change the slides. Go to the slide where we were. No, before this. But let it be there. Until I tell you, don't change. Now, this is where we are talking of basis of opinion, saying it is my audit is based on auditing. Then what we say further, it says what are our responsibilities relating to that. So we are saying that first of all, we are independent of the company, and we follow all the code of ethics as required by institute and as required under the Companies Act. Now you will say that yes, you are independent, you have already said on the top. So what is this code of ethics? Now code of ethics, there are code of ethics by ICI, which says, for example, even though the Company Act allows you to do 30 companies, you should do only 20 companies. Suppose the institute says you do only this, so many companies. Now Companies Act says you can do as many private limited as possible. You only they only restrict a public listed company or public limited company. Institute may say no, maximum 30, out of that 10 can be only a public listed company. So this kind of, there are two kinds of ethics. One is requirement under Act and requirement under our code of ethics. So we should follow both. For example, institute may say if you are internal auditor, you cannot be statutory auditor. If that is said, now it is said in the Act also, but in any case, if that is so, both of them have said this. Now, if the institute said the consultancy fee cannot exceed the audit fee, then that is one guideline or ethical guideline is there which we cannot, which we will have to follow. So we are saying here that we have followed all the ethical requirements, and we believe that another statement that we make as a basis of opinion is that we have obtained all the information and explanation as required, means whatever is sufficient and appropriate evidence is something that I have obtained. This is what is the para on basis of opinion. Now coming to the next part of the report says, this is standard report, that what is a key audit matter. Now I'll not talk on key audit matter, but I'll talk on emphasis of matter later on. That time we'll see what is the emphasis of matter. But currently I'm saying there are three parts: emphasis of matter, key audit matter, and other information. Out of which emphasis of matter I'll discuss when I discuss SA 706. Key audit matter and other information, I'm not discussing because our other able speaker Dhananjay will speak on that immediately after me. So here the key audit matters are those you should know only what is a key audit matter. They are the hello. Yeah, the key audit matters are matters which are most significant to the audit under the current period, and they are picked up from the matters as discussed with the management. So suppose I discuss 10 matters, I feel 3 are extremely important in the current audit period, that I report there in key audit matters. That is SA 701. And in case of other information, there are what is other information, where to find other information, everything we will get in that presentation. That is SA 720. Now SA 720 will tell you that what is the what is other information, whether it is consistent with the matters, whether it is consistent with figures shown in profit and loss account, balance sheets, etc., and about your knowledge that you obtained in this particular audit, whether it goes with that other information given, etc., etc. You will know that. Coming to the next one, responsibility of the management and road charge with governance for financial statement, that is SA 570. Now here, responsibilities of the management and road charge with governance. First is, we always say that it is a responsibility of the management to complete the accounts or to give the balance sheet, profit and loss account, which give true and fair view. So we are always saying, we have always taken a stand that in respect of preparation of the accounts, all generally accepted principles are followed, including the accounting standard required under section 133 are all followed, is a responsibility of the management. My responsibility is only to report on that, whether it is followed or not followed, but basically to follow and prepare account is their responsibility. But if you really see, there are several other responsibilities we mention, and which we have been mentioning, or we know, but we were not mentioning. Now we specifically say that this is the responsibility of the management and many other responsibilities. What is responsibility? Maintenance of adequate accounting records is one of the responsibility. What is other responsibilities? Safeguarding the asset is their responsibility. Preventing and detecting the fraud is their responsibility. Selection and application of accounting policy is their responsibility. The management responsibility also includes making judgments and estimate. What is the judgment and estimate? What is your how much liabilities need to be provided, or what is the gratuity for the future? What is my various estimates that I make in the accounting is their responsibility. Now, also implementation and maintaining adequate internal financial control, IFC, which we certify, is also the responsibility of the management. And therefore, all these responsibilities, we state there that they are responsible for all this. And therefore, there is one more responsibility cast in this new reporting guidelines, that whether the company is a going concern, and all the basis of considering it as going concern, suppose there are some issues regarding going concern, whether all those things have been disclosed properly or not, is something that we need to write. So here we are saying management is responsible first to see whether it is a going concern, and if they feel so, and if there is a doubt, we will have to see that this is taken care of and this is reported. Go to next slide. Now see what is our responsibility. Now coming to our responsibility as far as 700 is concerned, it says that I am giving a reasonable assurance that financial statements are free from material misstatement. Now there are three kinds of assurances. One is absolute assurance. What is absolute assurance? When I am giving a certificate saying that total sales of a particular, or total say particular inventory figure is so and so, it is absolute assurance that it is right. I think so much tax is paid, all advance tax and SA tax and all TDS, everything I'm certifying. When I certify something, it is an absolute assurance that this is correct. True and correct is absolute assurance. Now here I'm not giving absolute assurance. This is true and fair, and therefore I am saying I'm giving reasonable assurance. And there is, there is a third kind of assurance which is given in the listed company. It's called limited review. So it is a limited assurance. They say we have not audited the accounts of the company, but from whatever presentation is made to us of the figures, we say these accounts look okay. So this is a limited assurance for 3 quarters, and then a reasonable assurance at the end of the period. And there is no absolute assurance under this particular report. And this is extremely important, because in the same para we say that this audit is no guarantee that once audit is conducted, there will be no material misstatement due to a fraud or errors. So I am saying that because it is not an absolute assurance but reasonable assurance, I am protecting myself by saying that no, this can still have some material misstatements, that means some errors, and due to fraud or error, there can be error, a human error or otherwise. And therefore what I do, I say that I have identified the risk, I am doing the audit as per standards, I have sufficient and appropriate audit evidence I collect, everything I write, and I say there are internal financial control relating to financial statement. In spite of that, why it is not possible? Because of the inherent limitations of audit. We'll discuss it tomorrow, inherent limitation. But this requires us to state that we have exercised professional judgment, we have exercised professional skepticism, but still there can be errors. Now coming to the various statement we make as an auditor, we say we have appropriate accounting policies are followed. We say that management use of going concern I have tested, and I found that there is either it is right, or when the material uncertainty exists, the whatever company has given as a note is adequate. If it is inadequate, I have qualified my opinion, so I state that. So that these are the other clauses that we mention. And there are other things like determination of matters which are most significant. I told you other matters. There is an other matter paragraph here, OM. This other matter paragraph says that we did not audit a set of, suppose you are an auditor at HO and there are several branches, several departments. So you are saying that I did so much work. So you are saying so much turnover I covered, so much assets I covered, and all other assets and all other revenue are covered by other auditors of my colleagues or other. So I am telling the reader that so much I have depended on others. So in case of, for example, bank audit, most of it is done by the branch auditor. So you will say that this is what is done by them and I have depended on it. So this is one of the statement that we will make. Now another thing is report on other legal and regulatory requirements, which we talk about as a last part of our report, where we are saying that this is a very standard report, which we say first we say CARO is applicable under 143 subsection 11. and we in Caro 16 now. Caro 16 is still applicable. From next year it will be Caro 20. But that we state first. Then we of course say we have obtained all the information, proper books of accounts have been maintained, and we say the profit and loss and balance sheet are in agreement with books. We say the financial statement comply with accounting standard. We say representations received from directors that they are not disqualified. We say there is an adequate internal financial controls. And at the end, we have 3 more statements to be made at the end, saying that company has disclosed impact of pending litigation, uh, and company does not have, or company does not have any pending litigation. So if we say the impact of pending litigation on financial position is stated, it means something totally different. We don't bother about looking at it. For example, if there is a very material litigation, and if you feel that there is a 60% chance or 70% chance that company will lose, that means that much there is a provision required in the accounts. Company may say we have gone on appeal, and therefore it is not required to provide. Let us show it as contingent liability. When you are making a particular statement in the balance in your report that company has disclosed the impact of pending litigation on its financial position, then you are also a part of that particular estimation. So therefore, I know of a case where there was a reserve of 1,200 crores, where 300 crore was under litigation with various excise cases. Now, if these cases go against, if you are of the opinion that these cases would go against, it has a substantial impact on your financial statement one side, and another side substantial impact on your cash flows, because from where you will pay 300 crores if it is to be paid. So all these things need to be disclosed here. We cannot make just a statement that yes, that impact on financial statement has been considered, financial position has been considered. Company, another statement we make that all derivative contracts company has already disclosed, and also saying that investor education protection fund is paid. Of course, there are other things, that the name of the firm, FRN number has to be given, our membership number is to be given, UDIN needs to be generated within 15 days. And remember one mistake that we make while writing a date: if UDIN is not generated on the same date, then it cannot be written on the document. What we do is that we write it subsequently. See, when you are supposed to have issued this report on the date which you have put here. Once you issue a report where it is not in your hands, so you can't put a UDIN later on. So what is the requirement under UDIN here? UDIN guidance says that when you obtain a UDIN after the date of the report, then you state which day you have given a report, and after you generate that, send it to the person to whom you have given the report with a request that he should in turn send this UDIN number to the users of the statement. Either a report that you have signed or a certificate you have signed, whosoever is a user, he is supposed to, you don't know how many places he has given that document. So you should request him that I am requesting you to give this UDIN to those people to whom you have given this report. So this is how this particular standard goes. I think this, I have explained it so we know how much responsibility we are carrying in signing a so-called pre-printed report. So I think we should be very cautious on that. Go to the next slide. So now we talk of modifications to the opinion. Now, modifications to the opinion means the first one I gave you an example of unmodified report. That is when I have to give a very clean report. But now let us see that as an independent auditor, I feel that there is some problem. There is something that I need to report, and therefore I must say that what is required to be reported is something different, and I want to either qualify or I want to do several things. Now what I do is something that, let us see. Go to the next one. Next slide. Yeah, this slide. Yeah, 705. Now in 705, if you see what is this all standard about. Now say, I told you this standard deals with the content of auditor report, means what he should write, and the form of auditor report, means how he should write. So what he should write when he has something in mind that I don't want to give a clean report or an unmodified report, and how I should write. Both these things have been told to us by the standard. Now auditor, when auditor will modify opinion, it is also stated there that when you can use this standard, it says that auditor shall modify the opinion when it comes to the conclusion that financial statements are materially misstated. So if there is a material error in the financial statement, then I must use this standard for giving a revised report, and the content and the form of the report is told to us. Or I should use this standard when, as an auditor, I am unable to obtain audit evidence to say that there is no material misstatement. Means there is no, these accounts or these financial statements are not error free. This is what I want to say, but I don't have evidence to say either way. Management is saying this is what I feel is right. Now you don't have evidence whether it is right or whether it is not right. So you are unable to obtain an audit evidence to have a conclusive audit evidence to say that financial statements are error free. So this modified report format is to be used in both the cases. One is where I have come to conclusion that there is a material error and a management is not ready to correct that, or whether there is an error or not, there is no evidence. There is no evidence. It can go either way. There can be an error, there may not be an error. So in such both this situation, I'll be able to use this. Next slide. Now this is the most important slide of this particular revised SA 705, which is given in implementation guide. Now this is where on the left hand side you see types of opinion. Now these types of opinion are three types. One is called qualified opinion, one is called adverse opinion, one is called disclaimer opinion. Now we understand what is a qualified opinion. Now if qualified opinion is about a particular item, for example, if I don't provide a gratuity, I will say, and you don't know the figure also. If you know the figure, you are aware that you have to state that and also say what is the effect on profit, reserve, etc. Now you are saying that gratuity of rupees, say for example 50 lakhs is not provided for, and subject to that this accounts give true and fair view. So this is called qualified opinion. I am qualifying a particular item. Now there can be a qualification on non-disclosure also, that I'm saying, or a wrong disclosure also. So I'm saying that this is disclosed like this, but I want to state that this is misstated. This has to be disclosed like this under the act. So there can be qualification saying that managerial remuneration is not properly disclosed as required under the Act, Companies Act. So you are straight away saying that section 197 is not followed with Schedule 5. Now this is where this is a qualification. Subject to that, subject to appropriate calculation of managerial remuneration, this gives I give a report. Now this is a qualification and report. Now here you have to state that what is your qualification and what is the impact of that qualification on the financial statement, and how much financial statement would have changed by your qualification. Now coming to the second part, adverse opinion. Adverse opinion, friends, is where you are saying that this is not giving true and fair view. Adverse is completely saying no. So you are saying that your item, suppose you have an item in asset side, total of asset sides, it's a new company, they have just acquired the land, and when they acquired a land, it is 60% of their asset side or 80% of their asset side, and that land there is no clear title with the company. Now you are showing it as an asset, you have paid for it, and you don't have a clear title, or this is in great dispute, you don't know when this dispute will end, you don't know when you can construct your factory on that or whatever. Now this is very serious. Now this asset, whether it is your asset, no, because under land record also you don't have it, NA, it's an agricultural land, it should not have been bought in company's name or whatever, it is not made any. So it is so serious that this particular position shown on the balance sheet is completely wrong. This is not the correct position in the actual legal sense. So you are saying adverse opinion does not give true and fair view, is an adverse opinion. Now the third type of opinion is disclaimer. What is a disclaimer? As I told you that there are circumstances in which you are not able to say whether it is whether it is possible to give any opinion and on either side. So I am unable to say on either side whether it is whether I have anything I can give you any opinion on this, because I neither I have a record to say that they are wrong, management is wrong, nor the management has any record to say that this is this particular statement is right. So both of us do not have enough evidence. So I say that I do not know whether the accounts give true and fair view. It is a disclaimer of opinion saying that I do not know. So there are various things I can give you an example. For a qualified opinion, an example is given like this, that we state in a basis of qualified opinion. First, we say we qualify this for a particular item. We state that particularly in the accounting policy, for example, it is mentioned in accounting policy that the stock will be valued at lower of cost or NRV, net realizable value. Now you say that accordingly the cost should have been taken, cost or net realizable value should have been taken. Now that actually, if you see that in the inventories should be written down to that value. If suppose you are taking the market value is lower, then it should you should take market value. If it is a cost, you should have taken cost. And then the effect also, that if that was taken, your inventory value would change so much, and therefore it will change your profit, loss, whatever, which reserve, etc. is specifically mentioned, is something that you can write here. Or you can say basis of qualification is that you have a carrying amount of securities, and securities should be valued either at market value or lower of the cost or market value, which is not valued accordingly, and you have, this is a qualified opinion. And if you say what is a disclaimer of opinion, that you are saying that we could not, for example, in COVID condition, calculate, you could not go and visit the inventory valuation. But inventory, for example, I have a jewelry unit for audit. The jewelry unit inventory will be 80% of your asset side. Now, if inventory is 80%, how it is valued, and there is no valuation report, and management has itself valued and given me the figure, I will state that this counting of physical inventory was not possible, and there was no alternative method of finding out whether this was a right figure or not. And for example, or other example given in the auditing standards notes is that there is a system of the computer software has changed, and it doesn't give a proper result as far as accounts receivable is concerned. And the accounts receivable, we do not know whether it is giving appropriate figures, and therefore we are unable. Here you don't know the impact, and therefore this we are trying to say that this is not possible to be audited, and this is not possible to be certified. But I don't want to suspect also, it may be right also what management is saying. So I am trying to say that this is a disclaimer of opinion. Now this chart, if you refer, you have to understand this, what it is saying. It is saying the decision for modified opinion depends on that whether I will modify the opinion in any of the three types. It depends on nature of matter and whether it is materially misstated. Now, if you go by the nature of matter and how it is materially misstated, let us see the examples. Appropriateness of selected accounting policy. Now, here the matter is that whether the policy is appropriate or not. Now you are supposed to use a accrual basis of accounting. Now, instead of that, you are saying you have used the cash basis of accounting. Now, you are not used the whole cash basis. Partly you are used for some of the items. Now, that is not acceptable to you. So, you are saying that nature of matter and whether it is materially misstated. These items are not material to balance sheet. Suppose export incentives or suppose sales tax refunds and all. So, you are not saying it is materially misstated, but it is misstated because it has to be an accrual basis, not on cash basis. Now, if that is so, when the accrual basis is to be adopted, three things are done: whether significant risk and rewards of ownership have transferred, whether the amount is measurable, and if it is not unreasonable to expect the ultimate collection of the amount. If three things are satisfied, then only I will account it as an income. Now, whether these three things are satisfied in cash basis, probably no, and therefore you are saying that some of the items, suppose you are taking on LIFO. Now, AS2 does not allow you to take it on LIFO either. First in, first out, that is FIFO, or average method is allowed. Now, if you are taking, or specific identification method is allowed. Now, you are taking LIFO. Now, this type of appropriateness of selecting accounting policy will be at stake. And therefore, this is first example of nature or matter where it is materially misstated. You have to say what is the matter. Another example is application. One is the appropriateness of selection of the policy. Second is application of the policy. I told you that lower of cost or market value is the policy. Now your current investments, you are not doing lower or, for example, lower of cost or the market value of current investment. You are not taking. So you are not applied your accounting policy appropriately. When you are not applied. Hello, hello. Can all of you put it on mute, please? Can all the participants be on mute? Yeah. So I think when worst is selection of approach. So if you are selected, for example, LIFO, it is not appropriate selection, or cash basis is not appropriate selection. Here we are talking of application of these accounting policies. When they are not properly applied, even though they were properly selected and written, in application we have not done. The third example of this nature of matter, or whether it is materially misstated, can be appropriateness or adequacy of disclosure. Now, suppose related party disclosures. You are saying that you are giving adverse opinion because you feel that related party disclosure is not proper. The related party has three parts. One is identification, who is a related party. Second is the transactions with related party and the balances at the end of the year. And third is materiality of these transactions as compared to the overall transaction. If that is not properly disclosed in the notes, then you can qualify. Similarly, in going concern, if the going concern assumption is made, but there are serious doubts on that and how it is resolved, or how the management is still saying, tomorrow we'll talk on going concern in detail. But here again, it will come to the nature of matter and whether it is materially misstated. You are saying no, going concern is not properly stated. Coming to the inability to obtain sufficient and appropriate audit evidence, there can be several examples. For example, if there can be inability to obtain sufficient evidence, will be because, for example, for circumstances beyond the control of the entity itself, beyond the control of the management itself. For example, you are having COVID and therefore you could not go on 31st March for inventory count. This is beyond the control of either of you. There can be stock in the country like Iraq, and you are unable to do check it, or there is a strike, or there is a lockout and there will no physical count, or there can be accounting records are destroyed. You know, in Sangli there were floods and accounting records were completely destroyed. Now such cases the accounting records are seized by government in raid. Now they are not available and only photocopies are available or whatever. Now this is beyond the control of the entity, but that prevents you from getting the sufficient and appropriate audit evidence. Second example can be circumstances relating to the nature and timing of auditor's test and procedure for such time. Now, for example, auditor wanted to check cash or a stock. Now he is appointed he is himself appointed in June. Now how he will take stock and cash? So it is circumstances in which his nature and timing of audit test or audit procedure he could not complete, or there are internal controls which are not effective. Now you wanted to check internal control, financial control. There are controls to be checked during the year and nearer to the close of the year. Now you were appointed late, so it was not possible. Now you could not get confirmation of balances from most of the debtors or creditors. Now these kind of things may prevent you. For example, if I have only 3 debtors, I am dealing only with 3 parties and none of them are ready to confirm, and the subsequent recoveries or subsequent payment in case of creditors, suppose there are few creditors and either of these, they are so jumbled up, I am unable to say whether all bills are accepted or all debit note, credit notes are accounted. We don't know. So this is where you are not able to get sufficient and appropriate evidence. You can also have the third example of not obtaining sufficient reason because of the management limitation put up by management. Management will say, no, you cannot go to so many branches, you cannot do this. Now if that is so, then you should first tell the management this is a limitation. You try to resolve it, you communicate it with those charged with governance, and if they don't accept still, and you have no alternative procedures to find out, that suppose, for example, in case of inventory, I can have subsequent sales, subsequent recoveries, and then in spite of that, then that is an alternative procedure. If alternative procedure also fails, then I have not able to obtain sufficient and appropriate audit evidence. In that case, this is another example where I will have to modify my opinion. Now, what is auditor judgment about pervasiveness? Friends, pervasiveness means that this particular item which I have identified, or a total of several items I identified, is material to the results as shown under as asset liability or the profit loss. So here I am saying that it is not confined to a particular element. I gave the example of land where it was very material in that particular balance sheet. So you have to say, in case of all pervasiveness, whether all items of profit and loss account or overall profit and loss account balance sheet position, both or either of this, is substantially or materially likely to change by this, and there by my comment or by my observation or by my findings. In that case, it is all pervasive. And therefore we have to say that when the user is using this particular person who is using this financial statement, what he will see. For example, if I am not giving the details of a related party, I am not giving providing for gratuity. As I told you, suppose I have 5,000 employees. I know of a case where they were not providing gratuity. Now there is an NPA account. There are some arguments made by some of our clients that we have NPA account and bank is not giving what is the interest loaded on that, because bank has stopped providing, and therefore bank is not giving any certificate. Now that doesn't mean I have no liability. I have a signed contract with the bank for 13% say rate of interest on term loans and say 15% on my CCOD. So I must keep on providing the interest in the account just because the certificate is not available. Now these kind of things is all pervasive. These figures can blow up to a figure which is very, very high. Non-provision of depreciation. They say last year there was no business. In COVID there was no business. 2021 no. This is not allowed. You are saying this is all pervasive. Your asset position is wrongly stated. Your profit or loss is wrongly stated. So this is how we have to see this. Now coming to these are the kind of things that we should see. Now on the right hand side, if you see here, you will find that there is a chart made that if the financial statements are materially misstated, but it is not all pervasive, you will only qualify. But if it is all pervasive, adverse is, you will say it does not give true and fair. For example, if I don't provide depreciation, which is very material, I will say profit or loss is not true and fair. It is not right. This is not a correct figure. So this is adverse opinion. Similarly, when I don't get sufficient information, if it is not all pervasive, I will say, I will qualify saying this, suppose inventory value could not be certified, but it is not all pervasive. I feel that yes, still I can say subject to, that is a qualified opinion. But I feel it is all pervasive. This non-getting not information is all pervasive. My stock value is 70% or 40% of my balance sheet, and or my asset value is so high for which I have no confirmation. Debtors I have no confirmation, and there is a government parties which are neither paying nor confirming. Now these cases you will disclaim an opinion. So this particular chart tells us about that. And I'll tell you at the end only that when you disclaim an opinion, a key audit matter section, you cannot include a key audit matter section. When there is a disclaimer, there cannot be a CAM. So this is where I will like to tell you on this. Now let us go to the next slide. It's a 706. Friends, this is on emphasis of matter paragraph, which I told you, EOM, that is what we call emphasis of matter or other matter paragraph. Let us understand what 706 is trying to tell us about these two paragraphs in our original SA 700 report, and when we can use this paragraph. Go to the next slide. Go to the next slide. Yeah. Now here, friends, hello, can everybody be on mute? Can everybody be on mute? Can all of you be on mute, please? Yeah. So here, what I'm trying to say is in 706, let us go for these two concepts of what is emphasis of matter and what is the other matter paragraph and how we use it. Now coming to emphasis of matter. Coming back to our work, coming to this emphasis of matter paragraph, a matter which is properly presented and disclosed in the financial statement But if it is of substantial importance, it is of such an importance that the auditor feels that I must draw attention of the reader of the financial statement to this particular matter. So this particular matter, when is so much important that I must draw the attention. Now, we are trying to say which are these kind of matters where the attention is required to be drawn. Now, for example, the now there are some subsequent events. Suppose there are some subsequent events which are so serious, so important, and that you have to draw the attention because it is not a part of financial. So you are saying that this is disclosed somewhere, that this is what happened between the date of balance sheet and date of report. But this is so much important. For example, you have lost a case, or your whole plant was gutted by fire, which is a subsequent event. Your balance sheet was appropriate on the date March, but subsequent event is so much important that it is disclosed. First, remember that in case of emphasis of matter, the matter needs to be disclosed by the management, and that also being appropriately disclosed, means properly disclosed. Then only I can use EOM. Otherwise, I will have to qualify, or I will have to disclaim. I cannot, or I have to give adverse remark. I will use this EOM only when it is appropriately disclosed and appropriately presented. And I still feel that it is so much important. For example, there is a litigation, and you are said that I told you that 300 crore litigation. It is properly represented, and that is so much important that I want to draw the attention. So in EOM, I'll write subject to the management saying this is a contingent liability and not a actual liability. This gives true and fair view. For example, there can be a major catastrophe like COVID that has happened, and it had and it continues to have significant effect on entities' financial statement. That is what they have stated also, that in the subsequent year there was a COVID. Due to COVID, the sale was substantially less and the costs have increased and there are losses, etc. So you are saying that when I'm saying there is a super profit company in March 31st to 2020, and subsequent catastrophe has still been affecting the company, and therefore there are heavy losses next year. This is what is stated properly, that as an event between the date of balance sheet and date of signing the report. But that needs to be highlighted for a reader, because otherwise he will immediately invest in this company, or banks will advance loan thinking that this they are super profit. Actually they have made super loss, suppose next year. Now this kind of things are given, or this kind of things are stated in the EOM. Now coming to EOM, EOM is not a substitute for modified opinion. I mean, wherever I have to comment, I have to give adverse opinion, disclaimer of opinion, qualified opinion, I have to do that. Just many times, because we don't want to know, or don't want to qualify, or or the client is not accepting, or I don't know how to qualify or to disclaim, I am using EOM. EOM, I have found actually these are very, very serious matters. For example, stock is as certified by management, and stock is 60% of the balance sheet. This is not something I should write in EOM. EOM is not for that. So EOM is not a substitute for a modified or a qualified opinion. Now coming to the last part, as I told you, if it is mentioned here in CAM, then it cannot be mentioned in EOM. EOM and OM, for both of them, it is the same thing, that if it is a key audit matter, it will go as a key audit matter and not as a this particular EOM. Go to the next slide, please. Yeah. So in other matter paragraph, what is the other matter paragraph? There are matters other than what is disclosed in the financial statement. So first of all, you should remember that we are trying to give additional information here. Now, additional information is, for example, in a tax audit report, previously there was no tax audit, so opening balances have come unaudited. What you did, you had alternative audit procedures. You checked debtors, creditor recovery, payments, etc., etc. And therefore we are saying this, that we are use alternative audit procedures. But I want to say that opening balances I have accepted as audited by another chartered accountant. If I want to say that, that is a matter, or that I'll write in other matter paragraph. Now these matters should be such that which are not prohibited by law, but these matters also cannot be a CAM. But I want to say only one or two things more to you, that when you write in other matter paragraph that suppose opening balances are, I have not checked and I have accepted the previous auditors, either I was not auditor, you can even state that I have accepted the other auditor's report, or you can say these were not audited and I have used alternative audit procedure. You have to also state there that this is our report is not qualified for this. If it is qualified, obviously it cannot come here. So I have to state there that I have used these procedures and I am not qualifying the report. I am only telling you that these are the additional matters that I want to tell you. Another thing you should know about other matter is, suppose something needs to be disclosed by the management. For example, if it is a limited company, listed company or otherwise, you are saying that managerial remuneration need to be disclosed. Or forget a listed company, you have to disclose the related party transactions in the as a part of your balance, as a part of your financial statement, and that is not disclosed by the management. Suppose in the previous, in Maukaro, we had to disclose all the material, figures of stock, which are material items, etc. Now, I'm just giving you example. Suppose the repairs and maintenance, I have to say building and, other repair maintenance, plant and machinery and other. Suppose that is a requirement as per Schedule 3. Now that whenever there is a requirement as per law to be shown as a part of the financial statement and it is not done, it is not the auditor's responsibility to do that, and it cannot be included in other matters. So it is not that I'm supporting the management saying, okay, I'll give in my report if you don't want to give. Something that management should have given as a part of regulatory requirement, they have to give. I will not write in other matters. In fact, it will be a qualification that this need to be disclosed. For example, there is a simple statement of assets. Now, asset statement should start with gross value, then depreciation and net value. Now, suppose they don't have gross value. Many of the old companies, they have only WDV as a starting point. So the gross value as required under Schedule 3 is not disclosed. Now, when it is not disclosed, you cannot go 10 years back and disclose that value in your report. That is not the intention of other matter. Other matter is something which should not be one that where the disclosure was required by the management, but you feel that stating that would help the understanding of this report better. So that's why this is the way I'm writing. So whenever if the auditor writes EOM or OM, that is emphasis of matter or other matter in auditor report, he must communicate this with those charged with governance. Means he cannot, you remember, I have found chartered accountants making a report without even reporting to the management that I am giving a qualified opinion or an adverse opinion, or I am not qualifying, but I am stating it in my report as EOM, that is emphasis of matter or other matter paragraph, and that is without the knowledge of the management. That is not correct. As per the standard, we must inform the management that this is how I'll be dealing with various matter. This I'll put in CAM, key audit matter. This I am putting in EOM. This I am putting in OM. This is where I am qualifying. This is where I am giving disclaimer. I must communicate, and their responses need to be considered. I think with this, I'll stop here for the time being. And if you have any specific questions on this, you can ask me. Otherwise, I'll request the organizers to introduce the next speaker and go ahead with this. Thank you. Thanks a lot, friend. Thanks a lot. Thank you for being with me. Yeah. Over to Rohan.
Thank you, sir. Soil. Yeah, इथे ना.
Thanks a lot, Joshi sir. Thank you, Joshi sir, for accepting our invitation on behalf of Nashik branch.
Yeah, thank you.
Now, we have a series of auditing standards. Second session. For this, we have a learned speaker, Gokhale sir. Sir will cover SA 701 and 720. So I request our branch chairman, CA Rohan Andhale sir, to introduce our speaker.
Thank you, sir. Thank you, Soil. Thank you, Srinivas sir, for taking up time for our branch. We'll be meeting sir tomorrow also. Now moving forward to our next session, we have a very learned faculty, Dhananjay Gokhale sir with us. Dhananjay Gokhale sir is a Bachelor of Commerce from University of Mumbai and a fellow member of ICAI and is into practice since last 23 years. He is a founder partner of the firm Dhananjay J. Gokhale and Company, Chartered Accountant, specialized in providing management consultancy and auditing and assurance service in corporate and banking sector. He was a co-opted member of AASB of ICAI for financial year 18-19 and was nominated as a subgroup member of Banking, Insurance and Pension Committee of WRC of ICAI for the year 18-19. He was convener of the study group formed by ICAI Guidance Notes on Auditing of Banks 2019 edition. He is a member of expert panel constituted by AASB of ICAI for addressing the bank audit queries of members since financial year 2011-12 till date. He has authored articles in ICAI magazine, ICAI Guidance Notes on Audit of Banks of 2016, 17, 18, 19 and 20 edition. He has handled variety of assignments related to arena of bank audit, including statutory central auditor and mergers and acquisitions of urban cooperative bank. He is a regular speaker at various seminars on standards on auditing of bank audit across various regions and branches of ICAI. He had been a speaker of staff training seminar organized by public sector and urban cooperative banks. He had been a visiting faculty at University of Mumbai. With this brief introduction, I request Gokhale sir to address the gathering. Over to you, sir.
Yeah. Thanks a lot. Firstly, to invite me to address the session. And Srinivas has already set the ball rolling about talking about the first three standards in SS 700 series. That is SS 700, 705 and 706. So I will be talking about SS 701, that is key audit matters. And then I will be talking on SS 720. That is about auditor's responsibility relating to other information. And after I finish off with both the essays, we can take up the questions and queries if there are any queries are there. Even right now also, if anyone is having a query, I will keep my chat box window open. So you can ask the queries in between also, and I will try to address those as much as possible. So to begin with, let me just give you a little background about SS 701. SS 70 talks about communicating key audit matters in the independent auditor's report, popularly called as CAMS, that is key audit matters. As far as key audit matters are concerned, before we talk about key audit matters, let me just give you a background about this SS 701. SS 70 is something which is entirely different from 705 and 706 in the sense SS 701 focuses more on which are the matters related to audit are significant according to the auditor, and which are out of these significant matters, which are the matters which auditor wishes to communicate to the readers of the financial statements and audit report. So it's not really a modification to audit report. It doesn't even by any stretch of imagination, it is not really related to any qualifications or emphasis of matter as such. It's entirely a different concept. Now, as far as SS 700 series is concerned, there are in all, these standards are there. SS 700, Srinivas has already talked about. 705 is also covered. 706 is covered. 710 is there, which I'm not talking about. It's a very small standard. It relates to the earlier year's figure. So I will take up the remaining two, that is SA701 and 720 today. Now let's first talk about what is really meant by a key audit matter. Now key audit matters are those matters which, as per your, in the sense as per auditor's professional judgment, are of most significance in the audit of financial statements for the current year. So whichever portion is there which is most significant according to you when you have done the audit of financial statement, that is a key audit matter. Another thing is that the key audit matter you need to select from the matters communicated with those charged with governance. So wherever you want to refer anything as key audit matter, these matters should be firstly communicated with the management and those charged with governance. So it's not all of a sudden something which you can directly put it in the report. Like unlike SA700, like when you are issuing a SA700, there is nothing which you are really communicating first with the TCWG, that is those charged with governance. So here the first criteria is that firstly you need to identify that which are the most significant matters related to your audit as per your professional judgment, and secondly you need to have these matters communicated with TCWG. Now, what I will do is I will just give you a step-by-step approach about SA701 as to how to comply with SA701 or how to address SA701 matters. Now, before that, let me first clarify one more point before we start with how to apply 701. See, as far as SA701 is concerned, it is mandatory to be adopted for all listed entities. So the entities which are unlisted, SA701 is not mandatory. Now, when I'm saying it is not mandatory, it means that it can be optionally adopted by any entity. So if you're doing unlisted entities audit, SA701 is optional to you. And if you're doing an audit of listed entity, SA701 is mandatory to you. So wherever you feel that there is no key audit matter which you need to communicate, and if you're doing audit of unlisted entity, the better part is that you should not adopt SA701. But if you have any key audit matter, even in unlisted entity, it's up to you to communicate that through your report under the heading key audit matters. Now let's start step by step as to how to comply with that SA701 requirement. Now first thing is that whichever key audit matters which you have identified, you need to have these matters communicated to those charged with governance. So that is the first and foremost requirement. Now second step is that as an auditor, you need to decide that which are the matters which require significant auditor's attention. Now, what is really mean by significant auditor's attention? There are couple of practical examples I will give. First example is that if you identify an area under SS 315, that there are certain areas wherein there is a higher assessed risk of material misstatement is there. So that can be a matter which requires significant auditor's attention. Second possibility is that in financial statement, you might have certain areas or certain figures or certain schedules, you can say, which require significant management judgment. This will also include, certain accounting estimates which are having high probability or high estimation of uncertainty. So, for example, just to distinguish between two, for example, if there is a ad hoc provision made with respect to maybe non-moving or slow-moving stock. So it's an ad hoc provision which is made based on management judgment. So there is a high estimation of uncertainties there as far as the provision amount is concerned. But in case if you're making a provision of, for say, electricity expenses, then it cannot be called as a high estimation uncertainty item, wherein there is a certainty of estimation which a management can definitely apply. So wherever you feel that there is a significant management judgment is involved, and also there is a chance that there is a high level of uncertainties exist about this accounting estimate, then this can become a significant matter for your attention. Third example is that it might have certain items which might affect your audit of significant events and transactions which have occurred during the period. So any significant event which has occurred, and for that you have materially given your time as far as the audit process is concerned, even that can be called a significant event, or the event which qualifies as a significant auditor's attention. Now, once you have identified, let's go to the third part. Third thing is that there are certain circumstances wherein even if such matters are there, these matters are not supposed to be communicated through your audit report. So one possibility is that under certain laws and regulations, the auditor has been precluded from public disclosure. In the sense, you cannot disclose that in public. So these things, even though they are key audit matters, you are not supposed to disclose it. In certain very rare cases, you might find that according to you, in case if you disclose any key audit matter, it might outweigh the public interest benefit by communication as compared to the benefit which you can draw from non-disclosure. Now let me just give a couple of examples over here. See, at times it might happen that there are certain key audit matters are there, but which are not really conclusive or they are not really expressive. For example, if you're doing a bank audit, and in bank audit, according to you, the key audit matter is something like maybe valuation of immobile properties, which is required to be done once in 3 years, is not really adhered to by the bank. So you have found out items wherein there are lacunas in valuations. In the sense, the valuation is not frequently obtained. Once in 3 years is not followed. Second possibility is that you might have come across a scenario wherein there are divergences in NPS, and you are concluding to a fact that the identification process of the bank is not really automated and the bank is heavily relying on manual process. It may or may not really affect your financials because it might happen that the manual process is also sufficient one, and the bank has almost correctly identified the NPS. Now, suppose as an auditor, you have spent a large portion of your time frame while doing the bank audit on NPA identification process, and you have invested your time in reviewing that identification process. So ideally, it is a key audit matter according to that particular auditor. But whenever you are communicating key audit matter, if an auditor communicates something like that, in the key audit matter para, he specifies that the bank doesn't have an automated process of identification of NPAs, and the bank is relying on the manual processes which are built in by the bank. So this statement, even though as an auditor you might understand that it's not really a qualification because you are fully satisfied with the manual process which the bank is following. But a plain reading of this particular statement by a reader of balance sheet who may not be really well versed with the bank's internal practices, he might conclude that the bank doesn't have a proper process of identification of NPAs. So it might happen that the NPA identification or NPA ratios which have been published by the banks are not proper. But again, this is something which you need to take a call and decide about whether to communicate any matter as key audit matter or not. Now the step 4 is that whenever you are communicating the matters to those charged with governance, which was the first step which we discussed, that you have listed down the items which according to you are key audit matters or significant matters with respect to your audit, and you have communicated those matters to those charged with governance. And there is a response also which you might be receiving or a clarificatory statement which the TCWG might give it to you with respect to these items. Now out of these items, maybe say you have communicated 10 items and there is a response which is received, and ultimately you have decided that out of these 10 items, you want to freeze on only 4 items, and these are the items which you want to disclose at key audit matters. So this is step 4. So out of the matters, out of the communication with those charged with governance, you need to crystallize on which are the items or which are the matters which you want to state or disclose as key audit matters. It might happen that as an auditor you might decide that there is no matter which you need to communicate as key audit matter because clarification which you have sought has been that is very clear to you, and you have decided that there is no key audit matter. Now in that case, you need to specify in your audit report that there is no key audit matter to be reported by you. So understand a finer difference between a normal statement and nil statement. In the sense, in case if you are doing the audit of listed entity, and if you find that there is no key audit matter to be reported by you, so under the key audit matter para, you need to specifically say that there is no key audit matter. So that's why, just drawing that inference for unlisted entities. So for unlisted entities, it is optional. So when it is optional, and if there is no key audit matter to be reported by you, it's prudent that you don't mention that paragraph itself. So you just drop that para because it is not applicable to you. But if you start adopting key audit matter para for unlisted entities, then you need to also state whether there is any key audit matter or not. So choice is yours. But just to conclude this particular step 4. So out of communication which you have done with those charged with governance, you need to pick up the matters. Either you need to pick up certain matters to be reported as key audit matters, or you need to say that there are no key audit matters to be reported. Now, step 5 is that how to report that in your audit report. So in audit report, you need to have a separate paragraph heading as key audit matter para. And within that key audit matter para, whichever number of items or matters which you have decided, each will have appropriate subheading. So suppose you have decided 3 key audit matters. So there will be 3 subheadings. And under each heading, you need to have a disclosure about what is that key audit matter para, what is that key audit matter. You can also draw a reference to the disclosures which the management might have already made in notes on accounts. And also you need to specify that why the matter was considered as key audit matter, and how the same is addressed in the audit. So it will be a kind, you can also give it in a kind of tabular format also. Now step 6, it's not really a step 6, I can say that it's a kind of cross check for you. So always remember that key audit matter is not a substitute for expressing a modified opinion. So SA701 in no way is a replacement to SA705, which talks about modified opinion, or in popular words, a qualified audit report. So you're not supposed to include any qualification under key audit matter para, unless you are having SA705 qualification also in your report. Now step 7, which is very important, is that it might happen that you're having a certain matter, which is giving rise to modified opinion under SA705. And or maybe you are having a material uncertainty, which is really raising a doubt about going concern status of a particular entity. Now this will always come as a CAM, that is key audit matter para. But besides that, that should be also included in the respective paras which are given in SA705. So suppose you are having SA705 certain matter as as a qualificatory matter, that can get included in key audit matter para also. But you cannot have standalone qualification under SA701 unless you are also reporting that under SA705. So just to again give it in plain and simple words, you can have SA705 matter reported as a modified opinion. You can also include that in SA701 also. So 705, 701 can go along with each other. But if you have a modified opinion related to certain matter, you cannot just include that in SA701. That is prohibited. Now step 8 is about documentation. Now when we are talking about documentation process, we are talking about your own records. Now firstly, this essay is little liberal in nature. In the sense, why I'm saying liberal is, suppose you have communicated say 10 matters to TCWG, that is those charged with governance. Out of those 10 matters, you have selected only 3 matters as key audit matters. Now, typically by normal logic, what we do is whenever you want to exclude 7 matters, in the sense you have decided that out of 10 matters, 7 are not required to be reported as CAM. Generally, the tendency of every auditor is that one has to justify on the record as to why we are excluding 7. But fortunately, under this SA701, the auditor is not required to document as to why certain matters are dropped from CAM. So you don't have to build up any rationale about why you are dropping a particular matter. So you need to just have a documentation that which are the matters which you already communicated, and out of that, which are the matters which you picked up, and the documentation is taken care of. Second thing is that in case if there is no CAM, then you need to have that rationale on your record that there is no CAM which you are intending to report, except of course matters which are related to SA705 or SA570, that is going concern related part. Third thing is that even though the essay doesn't really talk about the rationale as to why you have dropped certain matters from the matters which you already communicated to TCWG. My individual view is that it's better that you have some kind of rationale for your internal record purpose. The reason being, whenever you are listing down certain matters as possible matters for CAM and you are communicating that with TCWG, it's better that you again test those matters before dropping those from reporting. So build some kind of, you can say, in-house process to determine which should be included and which should not be included. Naturally, when you are doing that, some kind of efforts are also required to be taken by you as to why now you are considering a particular matter as out of key audit matter. So why that significance has reduced. The possible reasons might be that whenever a certain matter is communicated to TCWG, they might have given you explanation and you have found the explanation satisfactory and that matter is no more significant to you. So if that is the case, have that documentation on the record and conclude that there is no significance or no relevance of that CAM is has remained now. Now there are a few examples of CAMs which I just thought that I will just share with you. This is not really an exhaustive list, but I just thought that I will just give it a try by giving few examples. One example is that there might be a change in software which has significantly affected the financials and also your audit process. For example, someone is doing a manual accounting earlier. Now we have shifted to maybe say Tally, or someone might be doing a Tally accounting in the sense using a Tally package or any normal package initially, and subsequently they have moved to say SAP-based system. So in that case, you can give it as a key audit matter para because it's a significant development as far as the audit process is concerned, and that you can very well give it under CAM. Second possibility is that you might have changed your audit methodology due to COVID-19 pandemic. In the sense, you might have taken remote access. You might have relied on the scanned documents which are produced before you. So wherever you change your audit methodology, you can definitely report it as CAM. Another example is that maybe there is a significant automation which has occurred related to accounting process, invoicing process, or maybe in stock record maintenance part, there is automation which has which has been effected. Fourth example, and which is commonly observed across the globe, is that typically in case of deferred tax asset, there is always an uncertainty which lies around the realizability of such items. It's a kind of a fictitious item. In the sense, if that particular entity doesn't earn any taxable profits in future, practically the DTA will never get realized. So these are the cases which are typically reported in many countries in the audit report as a significant matter, and it is reported under CAM because it's not really a qualificatory item. It is not a modified opinion. It is not a emphasis of matter concept. It's more of drawing attention in a different way by stating that there is uncertainty over realizability of DTA. Fifth example is that again, this fifth example is very common, and even though I am saying that this is a CAM, ultimately it's individual's perception and professional judgment as to decide whether it is a CAM or not. Now, this fifth example is about valuation of illiquid securities. Now, those of you who are doing treasury audits, or those of you who are doing PF trust audit or credit society audits, or wherever the securities are investment in securities have been done by the entity, you might be knowing that in case of entities like PF trust, gratuity trust, credit societies, banks, all these securities are marked to market at the year end, and especially about the illiquid securities, there is a market valuation process which is predefined. Now, whenever you are doing that valuation process, you are going by that technical valuations. These are not really the market valuations. In the sense, if you have a illiquid security and the market value of the security based on the defined parameters is say 97. For 100 rupees security, suppose the value is 97. In reality, the practical experience of all the bankers or the treasury people is that these illiquid securities typically trade much below that technical valuation. So if you are having a technical valuation of 97, typically the securities are traded around say 88 or 90 range. So even though you are doing a valuation, a technical valuation, which is correct, but as far as the technical valuations are concerned, practically they are always above the market realization. Another example is that sometimes you have a valuation of complex instrument which is done, which is having a high level of uncertainty in estimating that, like perpetual bonds are there. There are certain assumptions which are taken whenever the complex instrument are valued. So in those cases, there is a high level of uncertainties there, which you can portray by way of including that as a CAM. Seventh example is again something of a professional judgment. That in case if you come across a scenario wherein the basis on which the actuarial valuation is done, has been changed. So probably you can think of giving it under CAM. And another point is that as far as the actuarial valuation basis is concerned, there is a lot of you can say different bases which are taken by different actuaries. In fact, if you have noticed, if you compare a private sector entities and public sector entities like say LIC and all, there is a significant change and there is a complete change of basis which is taken for actual valuation. I don't know how many of you have seen that, but there are a couple of organizations which are using the gratuity related policies, one from LIC, one from some private sector entities, and they take both the statements for AS 15 actuarial valuations or actuarial provisions to be specific, and there is a big difference. Actually, there is a material difference between these two valuations. So if you come across such change of basis, you can definitely put it under CAM. Eighth is that suppose you are having a you are dealing with an entity which is having substantial branches, like typically a NBFC or a bank, and the methodology which that particular entity had adopted for interbranch reconciliation might have undergone a change. Maybe some automated process might have been introduced, so that can definitely become a CAM. Another point is that there might be certain cases and litigations which are pending before various authorities, which you feel that these are significant as far as your audit is concerned. Those you can include as a CAM. Few examples actually wherein CAM is not required to be reported or which is not supposed to be reported. One of such example is that there are certain block deals which are undertaken by the public sector banks on behalf of the regulator. So these are the deals which are not supposed to be disclosed in public. So the auditor, even though it is a significant matter, the auditor will not report it. Another thing is that there are certain transactions which the bank might have undertaken wherein the secrecy is required to be maintained under certain acts. So those transactions, even though they are significant in nature, you are not supposed to report that. But these two are extremely rare scenarios, not commonly found. But in case if it is there, then you are not supposed to report that as a CAM. Certain possible complexities while adopting CAM. First thing is that as far as joint auditors are concerned, it is found that many a times there is no consensus about which are the items which are of significant importance. So that is one challenge wherever there are joint auditors are there. And many a times there is a very fine difference between modified opinion, emphasized matter and CAM. So wherever you are giving a CAM, always double check once that whether it is not really portraying something which is which warrants a modified opinion or an emphasis matter. You can have modified opinion and CAM. But in case if you are giving a CAM which is in the form of modified opinion, then you are on the wrong side. Another thing is that you need to also ensure that the CAM which is written by you is very crisp in language. And there has to be a kind of balancing which you need to do between the information which you are giving through CAM. And if possible, it's better to avoid technical audit terminologies, because ultimately the reader of the balance sheet or reader of your audit report is not really a qualified CA. So try to be as much simple or straightforward as possible, and try to avoid technical jargons or audit terminologies when you are giving this CAM. So this was all about SA701. If you have any quick questions, we can take it up, or we can take it at the end also. I can see one question actually, and I can just quickly answer that. I think this was posted before I started off with the lecture. Does COVID lockdown disclaimer be given in CAM as a limitation? See, CAM is not really to give any limitation. So if you have changed your methodology because of lockdown, something like taken the remote access or relied on the scanned copies, or maybe physical visits were not possible, so you have done remote access audit, that you can give it as a CAM. But under CAM, remember one thing, that this matter can be a significant matter, but you should not have a CAM which is calling for modified opinion. Now, in the query, you have stated that you want to give a disclaimer. So disclaimer cannot be given through CAM. You can only give a significant change in your audit methodology. But if you want to give a disclaimer, like certain things are not made available to you, or you are not able to rely on the documents which are produced before you. So in those cases, you have to go by SA705, not really a CAM. But when you are giving this under SA705, you can add it also in CAM, but not vice versa. So I will start with SA720. By the time if anyone is having a query, you can post it in chat box.
Dhananjay,
Yeah.
there was a query for you in chat on CAM.
I already answered.
I'll read it. You answered. Okay.
Yeah, I answered.
That whether it should be there. And in addition, if you want to say something on COVID, your favorite subject, since we have little time and there is no question, then you can talk on COVID and related. I relate, there is a publication, on COVID and how to handle the COVID situations in various, auditing standards. So
yeah, what I feel is I will just run through SA720 so that
yes,
we can have detailed discussion on COVID related part.
Correct.
Because that is something I suppose that we need to address also. Because there are a lot of you can say not misconception, but a lot of things get discussed about how to write about COVID-19, and many a times I have seen many, especially WhatsApp group, talking about how to qualify report due to COVID-19. That is something which is not really warranted.
Yes,
It's not really required also in many cases. So I think I will take up SA720 first. It's a small essay, and then
you take up that, and then you can talk on that. There is no issue. We have enough time. What means not only that, some people feel it should be qualified, and because client is resisting, I'm not doing, and I feel very guilty about it. I need not be guilty. You can mention that. Okay, you go ahead. Go ahead.
No, we'll talk about that in at length, because there are many things which I think we need to talk on that.
Agree. Yes, sir. Yes. You go ahead.
Yeah.
Go ahead.
So now we'll talk about SA720, that is auditor's responsibility relating to other information. And as far as this SA720 is concerned, it's a kind of, you can say, a neglected standard, in the sense usually we don't really pay attention to SA720. And once you start reading SA720, then we realize that there are many things which we miss out about compliance of SA720. And as earlier Srinivas also said that in SA700 reporting format itself, we talk about compliance with all SAs. So SA720 is also not an exception to required compliance. So even though it is a kind of neglected standard, I thought that we need to stress upon that also. Now this is how we will be covering the entire SA720 in detail. So first we'll talk a little about the introductory part, and then we'll come to the objectives of SA720. Then we'll come to what are the requirements and how to adopt SA720, and which are the challenges which are there for SA720. Now, as far as SA720 is concerned, SA720 it was effective from 1st April 2018. So it's nothing new as such. This is the second year. And it deals with auditor's responsibility, which is relating to the other information. Whether that other information is financial or not, that is not really a significant one. But it talks about auditor's responsibility related to other information, whether financial or not, and it might contain certain material misstatements. This SS 720 also assists the auditor to comply with certain ethical requirements, and it's a kind of tool which is available to the auditor to provide a greater detail about the amount or other items in financial statement. So it's a kind of a supportive essay, you can say. And SS 720, it doesn't apply to preliminary announcements of financial information, and also it doesn't apply to securities offered documents, documents like prospectus, which are submitted to stock exchange. So it doesn't apply to that. Now, as far as the objective of this particular standard is concerned, as far as the object, when we are talking about the objective, now here the auditor is required to consider as to whether there is a material inconsistencies there between the other information and financial statement and other information and auditor's knowledge about which is obtained during the audit. Now, what is this other other information? Now, just to put it in simple words, that other information is everything other than your financial statement, which is becoming part of your part of annual report of that particular entity. Why I'm saying other than financial statement is, as far as financial statements are concerned, which will include balance, typically which will include balance sheet, profit and loss, cash flow, notes on accounts. So this set is already audited by you. So whatever is there in annual report besides financial statement, that is other information. Now, as an auditor, what you need to do is you need to consider whether that other information, if you compare that with the financial statement, whether there is any material inconsistencies there or not. That is first thing. Secondly, when you are going through this other information, have you come across a certain portion wherein there is a material inconsistencies there between your knowledge about that particular entity which you have obtained during the audit? So we are talking about two material inconsistencies. One is about other information compared with the financial statement. Secondly, other information compared with knowledge which you have obtained about that entity during the audit. Now, let me give you a practical example of both these scenarios. Let me give you first example about inconsistency between other information and financial statements. So, for example, in financial statements, you are given certain data about maybe say breakup of revenue items. And the breakup of revenue item, you are fully aware about which are the revenue streams which are related to that particular entity, and that has been adequately disclosed. But when you are going through other statements, like say director's report or chairman's speech or chairman's report, you come across an item wherein there are certain other revenue streams also which have been reported by that particular entity, in the sense by the director or by the chairman. Now, there is a material inconsistencies there. Like you might be having 3 revenue streams as per your financial statements. The chairman in his speech is saying that there are 6 revenue streams which are there. So if there is a material inconsistency, that is something which you need to address through this SS 720. Another example is that as far as the knowledge which you obtained during the audit about a particular entity. Now, suppose you are aware that a particular entity is, say, manufacturing certain variety of products. And in the chairman's speech, there is a claim which is made that there are certain other products which the entity is also manufacturing, which are not at all, you are not really aware about those products. Or it might happen, just to take an example, not really an exact, you can say a pinpointed example. That suppose you are doing an audit of a pharma company and you have done the financial statement audit of that particular entity, and the particular chairman is claiming that they are at the last stage of testing of COVID-19 related medicine or some kind of claim is done. But as far as your knowledge goes, that pharma company is not really manufacturing, or by stage of any imagination, they are not even into R&D. They are not even having any R&D capabilities. So the claim which is made in other information and the knowledge which you have about that particular audit entity, it's completely deviating from each other. So that's where SA 720 will come into picture. Now, wherever you come across such material inconsistencies, and wherever you are aware that there is certain information which has been misstated in that other other information, then in that case you need to report such instances by way of this SA 720. Now, earlier SA 720 has been revised, that is up to March 2018. Old SA 720 was there, and now in the new SA 720, it has broadened the scope. And while broadening the scope, it has linked that concept with the annual report concept. So now it's a straightforward and easy concept. So that's why, again, to repeat, what is meant by other information is that everything which is included in annual report of that entity, excluding financial statements. So that is other information. And another thing is that because of that, as far as the auditor's work is concerned, there is additional work which you need to perform with respect to this other information. And secondly, you need to have a correlation between the financial statement audit and the information which you are having because of the audit of financial statement, and you need to compare that with other information part. Now, most important part is that, which has been retained in SA 720 revise also, is that as an auditor, you are not supposed to do audit of other information. So your role is confined only to go through that other information. In the sense, what you need to specify is that you have read the other information part. So under no circumstances you are required to audit that. So you are not required to express any views about other information. So that is not really required. And as far as your role is concerned, your role is to ensure that you are having appropriate arrangements by coordinating with the management of that particular entity, that you are getting or you are obtaining the other information in a timely manner. And typically, you should get that other information prior to your audit report. So many times you must be aware that the drafting of annual report, like director's report and other things, they run parallelly with your audit process. So what you need to do is you need to request the management to provide you maybe a skeleton or a draft of that other information. So before you sign off your audit report, you can also go through that other information part also. And you can have both things correlated with each other. And in case of any significant material differences are there or inconsistencies are there, you can point it out. Now, wherever there is an inconsistency is there, and those inconsistencies are material according to you, you need to communicate that back to the management and TCWG. You might need to improvise on your audit findings also because of that. Just to give an example, suppose you have found some material inconsistency between your audit findings and other information, and you have asked or you have sought for explanation from the management regarding such inconsistencies. So in that case, if the management has provided you with certain details and you are satisfied with those details, but it might warrant you to revisit the financial statements which you are doing the audit, and maybe your audit inferences or audit conclusions might undergo change. You might require to even gather more evidence about your audit findings because of that. So as far as other information is concerned, it's a kind of supporting tool for you as auditor. This is just a brief overview about what is there in the standard when you are going through SA 720. It also has 7 illustrative formats of audit report, in the sense that other information paragraph, and there is a separate section which is required to be included in audit report under the head other information, and it is consistent with the other standards that is needless to say. Now, as far as reporting is concerned, let's talk about reporting by listed entity. And there are certain specific reporting requirements are there related to listed entity. So as far as listed entity is concerned, you need to have a separate section under the heading other information. So you need to have a separate para under other information. And as far as unlisted entity is concerned, you are having a kind of option that you can obtain some or all other information. So it's not required that each and every other information needs to be obtained by you prior to signing. And as far as other information gathering is concerned, especially in case of when you are talking about unlisted entity, in case certain other information was not provided to you prior to balance sheet signing or financial statement signing or audit report signing per se, subsequently also you need to obtain that other information and just keep it on the record and draw inference as to whether there is any material inconsistency is there or not. Now, as far as reporting of listed entities is concerned, there are certain specific reporting requirements are there. First thing is that you need to mention that management is responsible for that other information. So that is something which you need to categorically specify under that other information para. Second thing is that you need to identify of the other information which you have obtained prior to date of your audit report, and especially in case of any listed entity audit, the auditor also is required to identify that which is this other information which is expecting to obtain after the date of audit report. So for unlisted entity, this part need not be stated, but for listed entity, you need to also state that which is the information which you are going to obtain after the date of your audit report. Second thing or a second statement is that you need to also mention that your opinion, that is the auditor's opinion, does not cover the other information, and you are not expressing an audit opinion on this other information. So that is the third point which you need to mention. Fourth point is that you need to specify that auditor's responsibility related to this other information is limited only to the extent of reading, considering, and reporting on other information. So it is not about expressing an opinion. So you have to say that you are not expressing an opinion on other information. What you have done is that you have read, you have considered, and you have reported on this other information. Now, as far as information which you obtained prior to your audit report, then you need to specify that you need to have a statement that the auditor has nothing to report, or if you have concluded that there are some uncorrected material misstatements are there in the other information, then you need to specify those things in your other information para. Now we'll go step by step. First thing is that out of maybe say 4 other information parts, you obtained 2 before signing of your audit report. So in your audit report, you will say that the remaining 2 are yet to be obtained and which you are going to obtain after your audit report. Secondly, as far as the other information which you already obtained, if there are any material misstatements are there which are not yet corrected, then that you need to specify under that particular para. Now, when you are specifying these paras in your other information, not to mention, but you need to always communicate that in clear words prior to concluding your report with TCWG that these are the uncorrected statements. So wherever you find some corrections which are required in other information, firstly you need to communicate that with TCWG, obtain a clarification, and in spite of repeated requests from your side to correct that, if it remains uncorrected, then you have no choice than to conclude that and report it in auditor's report. Now, as far as a few important aspects are concerned related to this SA 720, firstly, it has increased your scope. So you are not really doing just an audit of financial statement, but your involvement is there related to other information also. Secondly, there is no assurance which you need to give, but your job is limited to the extent of reading and going through the other information and verifying whether there is any material inconsistencies there between other information and the financial statements. And most important thing is that you need to have this particular para included in your report. Many a times I have seen that this other information para is not really finding any place in audit report itself. So go through this SA 720 and start including this para. Just to put it in very simple terms as to what is really other information is there. Typically, if you are doing, say, audit of a private limited company or maybe a trust or maybe a society, In all these cases, you will find in case of unlisted or in case of any limited company, you will have director's report, which is the easiest example of other information. Second thing is that if that particular management is communicating certain other matters like the future plans or the present scenario, or certain things which are talking more about non-financial matters also, you need to just verify that whether it is in sync with whatever audit knowledge which you have obtained about that particular entity. And as far as trust or cooperative societies are concerned, typically they have a report which is circulated to the members of cooperative societies. Like even if you're doing audit of housing society also, just make it a point to just go through that covering the report of the management committee, which is usually addressed to the members, and see that whether there is any material inconsistencies there between your audit report and this other information. So just to repeat before I conclude, SA 720 it requires you to go through other information. Other information, just to put it in nutshell, it is everything which is included in annual report except for financial statement. So one part is financial statement wherein you are expressing an opinion. Rest all the things is considered as other information. And as an auditor, you need to verify that whether the other information is in sync with the financial statements or not. And in case of any material inconsistencies, you need to communicate that to TCWG. If there is a correction required in other information, again you need to communicate that to those charged with governance. And in spite of your communication, if it remains uncorrected, you have to report under other information para. Otherwise, other information para goes as a straight unqualified way. In all, there are 7 cases which have been illustrated in the essay as to how to report under the audit report in your audit report under other information para. So go through that. Whichever case suits you, in the sense whichever illustrated format suits you, you have to just adopt that and put it in your audit report so that your report is fulfilled in all the ways. So this was all about SA 720. It's a very you can say short essay compared to SA 700, 701, 705, 706. But just start paying attention to this standard. So if any queries are there related to this standard, we will address the queries, or otherwise I will just add certain points related to COVID-19 and the related part. So any queries about SA 701, SA 720? Okay, so let me just add a few points related to COVID-19 pandemic related part, since there are no queries. So as far as COVID-19, post-COVID-19, or you can say COVID-19 scenario is concerned, in almost all cases, there are certain methodologies which have been changed in all the CA firms. Whether you are doing a audit of a bigger entity or maybe a very small entity, it doesn't really matter, but methodology has surely undergone a change. At the same time, there are certain entities wherein you are doing audit and there is no change in methodology also, which has really happened. So firstly, wherever you are completely satisfied about compliance of all the standards on auditing, you are satisfied with the required audit evidence, or you can say sufficient and appropriate audit evidence, which was required to express an audit opinion, then in that case, actually, even if there is a COVID-19 scenario, you don't have to really give any kind of statement or any reference in your audit report. It is not something mandatory which has to be included. At the same time, what is really required is whenever you are talking about going concern, there are certain inherent limitations about to the management and also to the auditor to talk about going concern. In the sense, in post COVID-19 scenario, whether a particular entity will be a going concern or not, that is something which you can always debate. And frankly speaking, there cannot be any entity which is not affected by COVID-19. So to say that a particular entity is not at all affected by COVID-19 is a far stretch kind of a statement. So what you can really do is that you can add other matters para, wherein you can swiftly mention about how you are concluding, or how the management has concluded that a particular entity has remained to be a going concern, and as an auditor you don't see any visible discontinuity of business in COVID-19 pandemic. It's not really essential that a particular entity to continue to be a going concern requires to be earning a profit. An entity can surely post a loss in particular year or for a particular period, and still it can be a going concern. Second thing is that because of COVID-19, there is no dilution of standards on auditing which is expected to be done. So because of COVID-19, there is neither a need to qualify a report without a reason, nor there is a need of diluting any standards on auditing. So whichever audit you are doing, there is no dilution which is expected. Maybe your approach or methodology, towards audit might undergo change, but nothing beyond that. So if you're talking about any standards on auditing, like taking a balance confirmation or modifying a opinion under SA70, whichever standard you take up, there is no exclusion or there is no dilution to SA because there is COVID-19. So whichever audits we are signing off, make up your mind first that we are signing off audit as it is, in the sense without any dilution. There is no leverage or there is no dispensation of any standard which you are supposed to do. Many of you must have done bank audits in the month of April when COVID was practically at the peak level. And at that point also, there was no change of methodology of bank audit which was expected to be done. Only the approach or the way you are doing a bank audit might change. Like for example, you may not be visiting a particular place, but you are taking a remote access. But otherwise, everything is available to you. So it's only a virtual thing which you have done. But suppose because of non-visiting to a particular place, you are not able to conduct a particular procedure, and which according to you is material in nature, you can definitely include that in emphasis of matter also. Or if that materiality is really affecting your opinion, you can think of going for a modified opinion. For example, suppose you want to verify a particular stock and the management has denied you access from going to a particular place, and you are not certain about the existence of that stock itself. So if you wish, you can surely think of SA705. But if you are fairly satisfied that in present scenario you are able to visit the place, you are able to reconcile the March position with today's position, and if you are fairly satisfied, only thing is that you have changed the methodology. So you can think of having an emphasis matter or key audit matter specifying that you haven't physically counted a stock in March, but you have counted in the month of say August, September, and you are fairly satisfied. So you are not really required to qualify a report. That is something which you can think of. So just to repeat, actually, COVID-19 hasn't changed anything as far as the audit report is concerned. So the way you have done audit in March 19, the same logic applies to express an opinion in March 20 also, in the sense financial year 1920 financial statements. Only the methodology might change. Just remember one thing, as far as documentation is concerned, just try to be at par with the documentation process which you have followed in the earlier year, because that's where practically there might be certain errors or lacunas which might remain in COVID-19 pandemic, that you might be sitting at a different place. Your actual audit working team is sitting in their there may be own places, own native places. Your client is sitting in the is located in the third place, and everything is virtual. So in this virtual scenario, have everything documented as to how proper and adequate audit procedures have been followed by you, so that going forward, wherever there is a peer review which might take place for your firm, you should be able to prove that there was no dilution of standards on auditing which was done by your firm. So I thought that I will just add up this matter besides SA701 and 720. So if any more queries are there, we can surely discuss this.
I request members having query to share their queries in the chat box. Joshi sir is also online and Gokhale sir is also there. So they will solve all your queries. Sir, I think there are no queries from any members. Joshi sir, can you unmute yourself? Joshi sir. Joshi sir, you are not audible. I think he has left.
Still not audible.
Yeah.
Am I audible now?
Yes, yes, sir.
Now. So what I was saying is there is a publication of ICAI on COVID-19. It's about 48 pages. First 24 pages is on accounting standards, where there is a COVID-19 consideration is made already. In a sense, those kind of situations are covered. And in auditing standard, how to deal with various situations is there. And it's available on ICAI website free. So if somebody is worried, they can always download and use that publication there. So if there are no queries, I think we can close.
I am having one query.
You are right. Okay. So you ask your query to Rohan or to Sohail.
Yeah. No, I was having one query about UDIN part. When UDIN is taken subsequently, I fully agree that UDIN we cannot print it whenever we are taking UDIN subsequent to that particular time. But suppose someone has handwritten that UDIN, there is no barring part on someone writing, by hand in audit report.
No. There is no bar in writing by hand or print or whatever. What is my point is, suppose I have issued a report today on 3rd of December and I got UDIN within 15 days, that is say 11th of December.
Right.
Now I technically, even though I have not given it to client, you know that it is given. Actually, it is supposed to have been issued on 3rd. Right. In that case, I will not write. But institute is saying that you keep the UDIN with you and also inform the client that in turn he will inform all others who are using that particular statement or certificate or whatever. That's fine. Now I am also giving you one more tip on those who miss it in 15 days. What you do? Suppose you don't do it in next 15 days also. You are very busy, or let us say some chartered accountant himself got COVID or his family, so he never went to office for 1 month. Yeah. And now he suddenly realizes some of the UDIN is not taken. This happened for to many chartered accountants in March. When there was a sudden lockdown for 45 days, they could not go to office. And those UDINs which were to be taken at end of March, maybe before 25th of March, they were all pending. And now they were asking as to how to do it. So how to do it, I'm just telling you that you go to UDIN website, put it as today's date of your report. And therefore, everything can be generated. Put that asset value, put the reserve, whatever you want to. And below, there is a box coming. This box goes only to institute and not to anybody else. So that box you can write, this is for 3rd December report. Now we don't write client's name, we don't write client name. So we will say this is for report issued dated 3rd December. So I'm doing it actually on say 22nd December, beyond 15 days. So I'm saying it is on 3rd December. So that at least the institute knows that there was some statutory audit. So you say this is a report on statutory audit of a limited company or a private limited company, you want to say, issued on 3rd December. So at least we have a data in the institute. And if somebody says later on you are not taken, they say this was a problem, so I have taken it late. Now because the system will not allow you to take before 15 days. Now there is one more issue. This year again, everybody says that returns will be filed up to 31st of January.
Now people want to actually finalize by 30th of January. They don't want to finalize by 30th. Only problem is they have to upload their tax audit reports before 31st December. So what they will do, they will upload. But they have to upload balance sheet also, unfortunately. So they have to do everything before that date. But otherwise, what used to happen in the past, that I will actually do it on 29th December and put a date of 30th November. Now to do that, the problem is that then they are saying that you extend the due date of UDIN by another 15 days. So they are, see, I'm in UDIN directorate as a convener. So what they say that they give me a request that you make it 1 year. Like last time we made it 1 month. Sorry, we made it 1 month last year also. So they say this year also make it 1 month. I'm just telling you for the benefit of all who are listening that the website of the income tax has already gone live on UDIN. And if you don't give UDIN in 15 days, the original return is invalid. You know, it is that bad for the client. So you are now onwards, and we have requested MCA to include UDIN in all MCA forms. We have requested RBI to include in FEMA forms. We have requested GST Council to include it in all GST 9C and everywhere, especially 9C, sorry, 9C and all. So in that case, or various certificates that are required. Now in that say, I have told government that it is 15 days. Now to make it, you know, the whole idea was to make it 7 days and 0. Actually, it should be 0 only. UDIN is useful for that. I'll tell you another very interesting, but now with all departments now going live one after the other, they will go 15 days. It is almost impossible to reduce the 15 days period in future, because all the softwares will have to be changed by the government. So which will not happen. So I think 15 days is there to stay. We cannot ask for either 30 days or 0 days. So both are going to be an issue in this particular era of UDIN being used in this. Another information is UDIN is now being used by various other countries in the world, and Institute is actively supporting Sri Lanka, Pakistan, even Pakistan, Bangladesh, you know, and some of the African countries, some of the smaller Asian countries too, even Nepal, to go for UDIN, and they have been either using their own platform, or we have decided to form our own company where to the whole world we'll give UDIN technology free. So, or at a very nominal cost, because this is what is required in the whole world. So this UDIN technology is going whole world this year. We are trying with various countries, and we are also trying with various international organizations that this is recommended, and it goes live. One more thing that is, you know, when I was discussing this with income tax people, income tax team, which was discussing with us before this got launched, about more than a month back on video. I was talking and I raised a very serious objection in that meeting about withdrawal of UDIN. You know, I can anytime revoke a UDIN. Now I was of the opinion that when what is the system today? If I revoke a UDIN, suppose anybody, a government officer or a bank manager, has seen the UDIN. So what is the system? He gets a mail. He gets a mail from Institute that this UDIN, which was issued, was withdrawn, but you have seen it, means you have used it indirectly. Seen it means on the certificate you have verified, or on the balance sheet you have verified. And on the balance sheet means, of course, there is a query also whether I should put it on balance sheet. UDIN is to be put only on report or not on any other document. But other than that, people feel it should be also below balance sheet, profit and loss account, in cash flow. No, it is only on the report. But anyway, so if you have used it and then if it is withdrawn, it will be a serious issue. For example, a person has given, a branch manager has given a loan on a balance sheet which you signed, and you say, I am withdrawing my report, or I am withdrawing the UDIN, or revoking it. Now he will be in fix. Similar problem I was envisaging in 15 form 15 CSCB. Now you have issued, remittance has happened from the bank. Now you are revoking your form 15. But you cannot do that. I was of the opinion that revocation has to be limited to two days. One is for all, wherever the action is to be taken on your report. Suppose a bank loan is to be applied, or where you are having a remittance abroad, the revocation has to be maximum for 2 days, 48 hours, or when it is used. Suppose it is used in 3 hours. He's very much, he said, "No, give me a report. I want to go to bank," and he's sanctioning the loan. Now he has used, he has seen your urine. Then withdrawing a urine is not right. And withdrawing a urine or revoking a urine is something like denying the certificate I'm giving, I'm withdrawing the certificate. So that cannot happen. So I have strongly, even though it is not in the interest of profession, probably, I don't know, but it is in the interest of country that this is not withdrawn by the CS. And what is UDIN finally? UDIN is something that as a chartered accountant, I take a responsibility that yes, this is what I signed. And of course, the other advantage is that I know that non-CA has not signed. That is the other side of it. But when I sign as a CA, I take responsibility. I got a query from one of the banker that the chartered accountant who is a statutory auditor says, because there is a monthly statement on debtors and stock, and it is a very large advance. So they are saying you get it certified from your chartered accountant. Chartered accountant said, I'll certify every month, but will not give UDIN. I will give UDIN only on my last report. So the banker was asking me what it means. What it means that he is not giving me UDIN for 11 months. I said that means the statements are bogus. He doesn't want to commit that he has checked them and he has given you signature, because UDIN will lock him. UDIN will lock him saying you have signed. Today I can deny that I have not signed. XYZ signed on my behalf and copied my signature. Moment I give UDIN, because UDIN is generated on ICI website, it is generated on my number, membership number. So in any case, I cannot deny that I have given this report. So if you are not getting UDIN for 11 months out of 12 months, all 11 month statements are not reliable, in short, because he is not giving UDIN. Because as a banker, he did not know. Chalega na, stamp mark ke lao, CSA. They were not bothered. UDIN nahi to nahi hai. But now all the bankers, we are taking up another thing with the banker is many certificates that they are asking, and they are very onerous certificates being asked from chartered accountant, but those are different subjects altogether. But limiting it to UDIN, withdrawal of UDIN is something, or revocation of UDIN, we will take it up in next meeting and discuss when it should be possible and when it should not be possible. So we were about to go to 7 days and 0 days in future, but with this government accepting our UDIN concept, I think we'll stay with 15 days in the long run, and we'll neither increase it nor reduce it. And also, you can take a UDIN anytime. I'll tell you the advantage. I forgot to tell you why UDIN should be taken by every chartered accountant. I am having a software by which I analyze the whole UDIN data. UDIN has crossed 1.5 crore, 2 crore UDINs have been so far taken. When we analyze the data, for example, I come to know that my chartered accountants has certified remittances on LRS scheme, suppose of so many crore rupees. Now, government says so much is remitted. Then who signed for the balance? For example. So I'm saying that government is saying on Manarega, I spent so much, which requires, suppose, certificate of chartered accountant. They say they spent 1,50,000 crores or whatever it is. And my certification data for the year shows that only 1 lakh crore is certified. Where is the balance? Who is signing this? Why government is claiming that they spent so much? Who is responsible for the difference? So we are having data mining. Data mining through UDIN will help government to get some clues out the relating to economy is in the long run. That's why this escape route of getting UDIN after a particular date. Actually, there is no penalty today for not taking UDIN today. Like there is no penalty for you not doing CP hours today, even though they are mandatory. So UDIN is mandatory, but there is no penalty for not doing it. Now here the whole idea is that they do it voluntarily, and even if they miss, they give it so that my data mining is appropriate with the government. And I can tell government that my chartered accountants have, for example, they have challenges. 9C, audit under GST was to be cancelled by the GST Council. Why? Because why? They said 1 lakh crore was recovered, or whatever, 10,000 crore was recovered on 9, filing of 9. And on 9C, only 1,500 crore was required, suppose. So they say 9C is useless. Why bother? There is a whole country shouting why there is a GST audit not required. Now we wanted to prove that 9 is also filed by the chartered accountant. And 9C is also filed by the chartered accountant. This is audit and this is basic data, but it is compiled and signed by. So we have asked all the chartered accountants to write. I want to prove and write in that particular UDIN, you will find a figure is given, what is the amount of tax being paid. Now I want to prove in data mining to government that 10,000 crore also, or whatever 1 lakh crore came from us. We only did this filing. It is not that SSC was, and we want to tell government, if there is no audit, they will not pay you this 1 lakh crore. They will not pay in 9, because if 9C is a check on 9. If there is no check on 9 in terms of 9C, nobody will give you any money. 9 is being properly filed almost, and 9C shows less difference because 9 is also prepared by chartered accountant, where they are asking client to pay that so much amount you have made errors and you pay interest, etc. So interest, penalty, and even original tax is calculated by us. You know, when institute does something, it also helps the government in a big way. Also, we also are secure because we are argued, and there is a resolution. I think let people understand there is a resolution by GST Council to cancel GST audit. That resolution has not been given effect because we are fighting with back or to the wall, saying that I will prove that my chartered accountant is doing 9 and so much tax is collected through our system of checking. So if I can prove that, so I'm just requesting all of you to take UDIN even after the date, because the data mining which you do, which I do later on also, suppose after a month, you tell me GST audit I did, and this GST 9, I have whatever, that data will help me in telling government that, you know, my chartered accountant did this job, that job, something like that. So taking UDIN late also, today we are not putting any penalty because I want the data to prove to government many things about our profession, and that data mining will help us. So with this positive note, we are not saying that we punish, and we are of the opinion that hardly few chartered accountants are coming up with this, that they have missed UDIN even in 15 days. In COVID situation, this is more rampant, but otherwise, more or less profession is taking UDIN in time, more or less. I mean, there's very less percentage which is not taking. Anyway, this was a completely different discussion, but I hope that the people who are listening to this would benefit by that. Now there are some questions. In the meantime, Dhananjay, you can
There
check
is one
in
question in
chat
chat
box.
box.
You can
I
check
saw
the
that
question. We
I
are
saw that
auditing a
question.
small trust which is not
See, as
filing
far
income
as
tax.
income tax return non-filing is concerned, that really doesn't affect your true and fair view. So, if as per anyone's professional judgment, if it is going to affect your true and fair view, then only it will warrant a qualification. Otherwise, non-compliance of income tax return filing doesn't matter as far as audit is concerned. So even that mention in audit report is also not really required.
I will say that if the penalties or interest on a particular default will give material change to the profit or loss as stated in the statement or in the balance sheet position, then only it is. For example, amount is shown as contingent liability, but it is actual liability, which is say 5 crores. Now you feel it is a contingent liability. They say contingent, you say actual. Once that 5 crore comes on balance sheet, it will totally vitiate the picture, because then your current asset would be less than current liabilities and you will have a very serious issue. In that case, qualification is required. Anything that affects my position of either the financial position in terms of balance sheet, that is asset liability, or profit or loss, that is the time I will qualify. Not because, even PF is not paid. What is the penalty? 12% interest, 21% interest. Adding that 21% interest, my profit is still, it is hardly 1% of my profit. Then where is the question of qualification? Just because a law is violated, unless violation of law is so fundamental that my going concern concept itself is in doubt. My suppose pollution control board can close my factory. My non-payment of excise, my factory could have been closed, locked. That means that is a going concern issue for me. Then I will qualify. You have to find out that non-compliance of law, what is the impact on my financial results? And if the impact is substantial or material, as we say, in terms of change in profit loss or change in the asset or liability position, that is the answer that we will qualify or consider it. Otherwise, as you say, you can even ignore that non-filing of any type of return, profession tax return not filed, 1,000 rupee penalty per month. I mean, that is not an amount which, even not filed for 3 years also it will affect. So something like, but suppose there is a TDS return not filed for 10 years. Penalty is 100 rupees per day. Now, if you feel that for all 10 years, every quarter return, the total penalty is so many crore rupees or so many lakhs, and it is a material figure for you, yes, you need to qualify that TDS returns are not being filed for 10 years. You got the difference, huh? That how it affects in the accounts or the financial position or the profit loss is something to be seen before just going by any non-compliance of any law by itself is not a qualification or not a disclaimer. I think Sohail, you can close if there is no question.
Yes.
There is some question back, nahi na? Wapas kuch hai, nahi hai actually. Okay, chalo, we can close.
Okay. So once again, thank you to Srinivas Joshi sir and also to Gokhale sir for accepting our invitation on behalf of Nashik branch. I request all the members to be present tomorrow also for this wonderful session on auditing standards. Tomorrow we have Joshi sir and also Abhijit Sangire sir for auditing standards. So once again, thank you on behalf of Nashik branch. Thank you.
Thank you. Thanks a lot. Thank
sir.
you, Rohan and Sohail both, and all the participants. Thanks a lot. Thank you.
सर उद्या 5-1 मिनिटं पहिले आपण स्क्रीन परत चेक करून घेऊया म्हणजे
नाही नाही ते मला आता काय होते माहिती का स्क्रीनचा प्रॉब्लेम नाही आहे इथे वायफाय किंवा मग मी काय केलं आता मी माझ्या कार्डवर टाकलंय
ओके
माझ्या कार्डवर आहे आता चालू पण नाहीतर काय होतं वायफाय नीट चालू असेल तर तिथे नाहीतर मग वी कॅन शिफ्ट टू डेटा पॅक ओके विल डू इट टुमॉरो 5 minutes to 5
yes sir
thank you and thank you Dhananjay for accepting my request for coming to this branch.